Hi guys, Piotr here, it's LiteFinance Global YouTube channel. It's my pleasure to be with you again. Today we are going to get back into the grid trading. If you remember, a year ago I recorded the one related to the grid trading based on the consolidation, move out of the consolidation. Today we are going to discuss grid trading within the trending market. Okay, so grid trading within the trading market. Well, again, a little bit of the twist. What you have to remember that the grid trading is a very dangerous one, and especially if you are, as many different, let's call them educators, are advising trading without the stops. For me, it's not acceptable. Okay, so even if it's a grid trading, I'm adding a little bit of the twist. I'm trading with the stop eventually, and I got my risk defined well in advance. All right, so if you do remember, breakout of the consolidation or trading within the inside the consolidation, that was the video I recorded a year ago. Today we are going to discuss the trending market. So today we are going to take the advantage of the price movement in one direction, and we are going to try to build the grid in the direction of the overall trend. So that's the daily chart of the euro dollar, and that's we know we are going down, so that's quite important from my perspective, because I'm going to try to trade into that direction. So if that was the latest consolidation somewhere over here, right? If that was the consolidation with the downside break, then I know where is going to be where my levels, what I wanted to achieve, where I want to trade my my grid, right? So after the breakdown, one of the first, based on the daily chart, is going to be the gap between the days, something we were discussed quite few times. So approach into that on the intraday, from the intraday perspective, is going to be what I'm looking for, right? So let's have a look if there was something interesting from my perspective. And before I'm going to go further, we have to understand one more thing. If you guys do remember, we were talking where is the active stop, where is the level we are not going to, if we are going to continue to the downside, the level we are not going to cross. So in that case, it's not that one, is here, right? So if we have some kind of the swing, right, there's 1, 2, 3 breakout trading, and the people are usually placing the stop. That's where the most of the books are advising to place the stop. I've been already explained to you that for me this one is active, not that one. This is where the market is going to get back, is going to take the stops and move further, but without those people with the stops over here. So with that being said, we know where is the level. I'm going lower to 4-hour chart to try to check if there is something interesting from my perspective, and there is one more level where I would like to eventually start to build my grid. So where is it? It is here, based on the this break to the downside, right? So I'm going to place another line in case of the market is going to move higher, and as you can see, there you go. All right, so that's the green one is a breakdown through the daily chart, and this one over here is related to the move and break to the downside on this 4-hour chart. Let's have a look what we have on the 1-hour chart, and let's start to explain what we are going to do. All right, so the most important thing, the calculation I'm going to do, where is going to be my stop. As you can see, that was the overall move. So my stop is going to be above this level, not that particular one. So let's place few more lines, all right? There you go. That's where my stop is going to be, +1, spread +1 above. We can change the color a bit to have a knowledge that that's gonna be our stop. All right, so let's switch lower. Let's switch to the hourly chart and let's have a look. What we have when it comes to the intraday trading. So after the breakdown, I know from the higher time frame perspective where is going to be my stop, right? That's my stop because of the price action from the higher time frame. Then we have the green line from the daily chart, the breakout level, right? On the daily chart, and then I'm looking at the particular price action to try to build my grid eventually, right? So in that case, taking into the consideration what we've seen on the higher time frame, and finally here on the 1 hour chart, all right? And there is another one line over here I'm going to explain in a second. Okay, there we go. Okay, because of this hourly breakdown out of this consolidation, all right? Okay, here strong move to the downside. We've seen on the 4-hour chart as well. Move back, so that could be even the 50% of that consolidation from the hourly and the breakdown level from the 4-hour chart. That's what you have to do by yourself. So that's gonna be my grid. So I'm going to start to sell at this level, all right, based on this breakdown from the consolidation. Then that's gonna be my next selling level, and that's gonna be my third selling level, right? When it comes to the downside, what I'm going to try to achieve, what kind of the target. The first target is going to be the retest of this very, very low with the stop above this one, all right? And I'm going to risk, on the first, I'm going to risk 0.1%, okay? On the second one, I'm going to risk 0.15. You know these levels because we were discussing quite a few times this type of the approach. And on the third one, I'm going to risk 0.25. In that case, my total risk is going to be ½ point. Of course, you have to do plenty of tests. You have to try and adopt this strategy. You have to check if it's suitable for yourself, what kind of trader you are. That's the thing, that's the questions you have to answer to yourself. Then plenty of tests. You have to do your homework, you have to do your own research. So trying to summarize the thing here, we are looking for trending market, all right? In case of the move to the downside, the stop is always above the second swing, right? If that was the first, we are moving from the right side to the left, so that's the second, and we are looking for the price action within that one with the stop above and looking for equal move to the downside. In that case, in our particular example over here, the retest of this low, and only 2 positions, as you can see here, only 2 positions based on that grid would be open. So the 0.1 and 0.15 risk over here, we haven't quite hit the green from the daily chart. Stop safe, and we are approaching, based on the real-time example, we are approaching the target. In that case, you may want to work with your stop, you may want to work with your position, you may try to cut this 0.1, you may want to move the stop lower for this second one. This type of the approach is something you have to do by yourself based on the number of tests you are going to do. So today we were talking about the grid trading in the direction of the overall trend. So we were looking for the trending market, then trying to move lower on the time frame. We can try to go to 15-minute chart as well. You can try to trade based on the 5-minute chart. But our particular example was based on the 1 hour chart, so we've checked daily chart, was moved to the downside, and then we placed the first line based on the daily chart, then we moved lower, we were looking for the levels based on the price action and on the 4 hour chart, and finally on the 1 hour chart. And that's how we were trying to build our grid, and our grid was based on the 3 orders only, and the specific approach when it comes to the risk. So the size of each position is going to be different. That's the quite important thing. Again, trying to point the thing, I'm not trading without the stops, so that's the thing, because you may blown your account very, very quickly. That's number one. And number two, specific number of the orders when it comes to the grid based on a risk approach. So for me, it's 3 positions only. With that being said, guys, please like, subscribe, leave the comments below, leave the questions in the comment section if you have any. It was a pleasure. Stay safe. Wish you a great next trading day. Thank you. Take care. Goodbye. See you around.